Well, the markets are open for this Monday to kick off a brand new week. Let's get right to those numbers provided to us by Bar Chart. The corn market down 4 3/4 on the December contract, 373 3/4. And we've already gone down and kind of tapped a new low for the day so far at 373 1/2. March down 4 3/4. The May down 4 3/4 as well. We're seeing a trend kind of develop here, at least 4 1/2 cents lower there. And then in the soybeans, November down 8 pennies at 10.35 1/2. January down 7 1/2 at 10.39 3/4. The rest of those contracts 4 to 6 cents lower. Chicago wheat is our next stop. It's December down 6 1/2 at 5.68 1/2. March down 6 3/4. The new crop July down 6 1/2 cents. In the Kansas City wheat market, December's down 4 at $5.25 even. The July is down 3 1/2 at 5.23 1/4. The Minneapolis wheat market is weaker as well. December down 3 pennies, a bushel at 5.48 1/4, and July down 3/4 at 5.77. The cotton market here this morning in December is the contract of interest. It's up just 10 points at 65.76 cents per pound. I want to reiterate what we had for overnight sales. There were 3 of them, 435,000 ton total, and it broke down into 3 different batches. 132,000 ton to China, 132,000 ton to Pakistan, and 171,000 ton to unknown destinations. So pretty good overnight sale here of soybeans. Joining us now, Dewey Strickler with Ag Watch Market Advisors in Franklin, Kentucky. Well, good morning, Dewey. We've got probably what would be considered a pretty good sale here, but it doesn't seem to have had a whole lot of effect on the market. Or did it? Did it stop us from falling even further than what we could have?
Well, you know, when you look at the sales that we've had here, John, it seems like we have something almost every day. There may be a day or two in which there is the exception there, but a lot of the good news has been priced in to the market here, and we are into harvest here, so you're going to start seeing some harvest pressure. It's going to weigh on these values just a bit.
Dewey, Marlon Bowling was telling me that in your area and his area there in the Tennessee-Kentucky border there, that a lot of the soybeans are already dropping leaves, and there's quite a bit of corn harvest taking place. So you got to wonder how much of this is outside influence from those outside markets, or how much of this is, as you mentioned, that harvest pressure here a little bit. Do you think that maybe that's going to be the new focus? Do you think that these overnight sales, these constant sales, are going to kind of fade off in the background, or you think that if those stop, that will get the trade's attention again?
Well, when you look at the soybean market, first of all, beans usually, as far as our exports, they begin to taper off here in November. And we got a little bit of time before that happens there. But, you know, we just got started here in the harvest, and once we start hearing some yield reports, if the yield reports come in better than what they were been looking for, then, yeah, it's going to weigh some more on the market. I don't think we're done with the beans here just yet. I've been looking for a 1 to 3 day pullback, and then about a 5 to 7 or 8 day rally, and then I think we'll be looking at our final top in soybeans.
Dewey, do you think that is leading the rest of the complex, the corn and the wheat as well?
Especially the wheat market. I think the corn is trading on some of its own merits as well, because we have had a bit of a pickup or increase in sales here of corn, export sales, that is, here over the past, say, couple of weeks or so.
Okay, Dewey, we'll come back in just a moment, and we'll talk about how this livestock trade is starting its Monday as well. That's straight ahead. Don't go anywhere. Stay with us right here on the Market Day Report. Let's check on that livestock trade, and it's open this morning here on this Monday. Going to be a busy week over here in the livestock trade with a lot of reports. October live cattle down 92 cents a hundredweight at 106.42. December down 130, and February down 140. A lot of those deferred contracts, well, in fact, all 4 of them, December, February, April, and June, are all lower this morning. In the feeder cattle market, it's the October down 157 at 140.85. November feeders down 177 at 140.75. And the January is down $1.75 Hogs are lower too this morning. October down 97 at 65.52. December down $1.15 and February down $1.07. The outside markets, well, they started out weaker, and the Dow down 673 points. The S&P 500 down 11. The NASDAQ, it's down 98 right now. So, Dewey, my question to you is, do you think this is all related? Does there just seem to be a risk-off day today that's putting a drag on all of the commodities?
Well, I think there is. If you take a peek and look at the dollar, you'll see that the dollar's stronger here today. So that is going to have a bearing on the meats as well as the grains. But when you look at the cattle market here, we got a pretty steep premium to the cash markets. The cutout was down last week, and I think the cattle market could start to back off here a little bit.
Do we had that correction that everybody's been talking about over in the soybeans. We just had so many longs in that market. Can you say the same thing for the hogs?
Well, I don't keep up as far as the hogs are, as far as the funds are concerned, but I do think that we got the hogs. Yes, they're overbought here, but so far the pullback that we've seen from the October contract at this 68.72 looks like a correction. So that being the case, I think we could have maybe one final shot up here close to about 70 here, and then that's going to likely wrap up our advance in the hogs.
Dewey, always appreciated. Thank you very much. Nice job here this morning. We'll talk to you again very soon. Those outside markets Dewey was just talking about, that dollar is up 603 points right now at 93.555. And crude oil this morning, Janet, it's down $1.35 a barrel at 39.76. Back to you.